Welcome back to Making Money Matter, ladies and gentlemen. I'm your host, Kerry Stevenson. Today I've asked Tom Davidson. He's the CEO of ACDC Metals. Isn't that the best name in the world? ACDC Metals. Love it. ASX code is ADC. Now, what are they? They are a heavy mineral sands company. Their projects are in Victoria, but they've also got this proprietary rare earth element processing technology. So they've kind of got, they're doing getting the stuff out of the ground, but then they're going to be using this technology to really add value further down the track. And it is further down the track. Last time I spoke to Tom, if you want to go and check it out, the last interview we did was in November last year. So it's been a little while. This week, they have come out with the announcement for their scoping study, all about the numbers. ACDC only listed in January of last year, and they have not let the grass or the heavy minerals lay under their feet. They've been busy working, drilling. They've got 8 to 9 tenements, so it's a pretty exciting time. And Tom is at the forefront of making this all happen. Tom, great to see you.
Yeah, you too, Kerry. Thanks for having me on the platform again. And yeah, it's been busy since November last year.
You've been very busy, and I want to catch up with a lot of that. But a lot of people are a bit nervous around rare earths and mineral sands at the moment. What's your view on the market, where we sit, and where you think it's headed? Because you're not getting into production till the end of this decade, sort of 28, 29, 30. Just love you to explain to our viewers the market side of things.
Yeah, so I guess, the last sort of 18 months to 2 years, the rare earth story was definitely very hot. And when you look at the rare earth suite of elements, there's the 4 main ones that you really focus on, and they're the real money makers. And that's your neodymium, praseodymium, dysprosium, and terbium. So 18 months, 12 months ago, NdPr, that was sitting at around 150 a kilo. And that was, and so when you have that as 80% of your revenue in the project, every project looks amazing.
Yeah.
So obviously current spot price at the moment is around $55, $60. And so there's been a readjustment, I guess, in the expectations of the demand towards the end of the decade. But, if you read through the Goldman Sachs, the Canacords, over the last sort of couple of months, you can definitely see it's starting to flatten out, and they're sort of showing the increase in pricing over the next 3 to 4, 5 years. And so we're still showing, or still seeing by 28, 29, 30 that you're back up to over that $100 mark. And so that'll bring a lot of projects back online. And so that's sort of the long-term view you've got to take with all of these rare earth projects is, right. I guess with our scoping study as well, we're not looking that's not being turned on tomorrow. We're at scoping level. That's the first stage of engineering. So we've gone through, done a JORC resource estimate. We've done a scoping study, which is using really broad metrics. We've done, some test work. We've done a little bit of mining optimization, really just to see, is there a project there? And so you've got to jump through those stage gates, and that's the next, 3, 4 years, and you've got permitting in that as well. But really at this stage, you just want to see, is there a project there? Is there a robustness in financials, knowing that things will adjust and change over time? And so that's where we have the confidence that in, say, 4 or 5 years' time, we can see that NdPr price coming back, and that's when then everyone has that belief in the projects.
How important is a scoping study to a project like yours? I'm just curious as to, is that like, if the numbers don't stack up, that's it? Or if the numbers don't stack up, we'll go back and rework them? How does it?
Yeah, because I guess once if you go the step beyond scoping study is a PFS, a pre-feasibility. And obviously to do a pre-feasibility, you've got to have reserves, and you've got to do a lot more drilling.
Okay.
And so more drilling, more money, and more test work as well to be able to do that work. And so you really want to be able to take a step back and just have a sort of bird's eye view evaluation of the project, knowing that there's probably a good reasonable amount of variables that can still adjust and play and to play with to move forward. But it really gives you that snapshot to go, yes, let's proceed, or let's park it and wait for certain conditions or factors that are outside of your control until they turn and go. But and so that's really the intent of the scoping study, is to give you that sort of initial evaluation and look at the project.
Okay, so let's cover the scoping study, and then I want to go into a couple of other areas, if you like, market cap, capital structure, all those sorts of things from I guess an investor point of view. And by the way, not financial advice, ladies and gentlemen. Call Tom or do speak to your financial advisor. But your scoping study, which was announced this week, has actually shown pretty strong economics for this project. Can you talk us through some of the numbers and how it's stacking up?
Yeah, so the project it's a 46-year mine life at 6 million tonne per annum. And so these mineral sands operations, generally you go for a long mine life, and it's not too different to the ones that are around us, where you got Astron, WIM, and VHM all just within 20, 30 kilometers. They're all FID, similar to the scale of projects.
Sorry to interrupt you. FID, ladies and gentlemen, final investment decision. Sometimes they do these acronyms, and I've got to stop them.
Yes, sorry.
So those three are around you. They're all at final investment decision for their projects.
For their projects, yes. And so our scalar project is in a similar ballpark. There now, we think our valuable heavy mineral assemblage is slightly stronger. We have a really good monazite assemblage, and that's really the big sort of revenue of the project. If you look at our EBITDA over the 46-year mine life, it's over 5.7 billion.
B for billion.
Yes. Yeah, okay. It's a long mine life, but I guess if you break that down to per annum, in phase one, where it's just the mineral sands operation, where you're just doing physical separation and producing a heavy mineral concentrate, so that's your zircon and your titanium, that's a well and true tried mature market. So pricing's well understood. That's where Iluka and Tronox and the others feed and supply into that market. And we're then producing the rare earth concentrate as well. And so that's producing 75 to 80 million EBITDA per annum. When we install the phase two, which is the rare earth processing plant, that would be in South Australia. That's where we take that rare earth concentrate and we upgrade it. And we do a chemical process on it called the caustic. And so we're taking it from its mineral of monazite and xenotime into a carbonate or oxide, which is then ready for the further separation and into that battery manufacture. And so, but the point of doing that upgrade is not only the downstream onshore processing, but there's also the big kick in revenue as well. So when the rare earth concentrate is leaving the mine site, the mine gate, it's current pricing 9 to 11,000 tonne per annum, which we're using for the project in sort of 28, 29. When we take that through and do the caustic crack process on it, it's into the 30,000 up to 40,000 tonne per annum. So you're really getting a big kick there, and I guess that's whole part of that.
Per 30 to 40,000 per annum.
Sorry, per tonne of material.
You said per annum. And I'm like,
no, sorry.
Per tonne, ladies and gentlemen, it's not per annum, per tonne.
Per tonne. So that takes our EBITDA from 75 to 125 per annum. So it's really a good, cash making project. Obviously, there's some capex as well. So 300 million for the initial investment, which is the mineral sands operation itself. And then in year 3 is when we would bring on that rare earth processing plant, which is for an additional 100.
Big numbers. Now, I got to ask you, Tom, having a look at your capital structure at the moment, it's tight. There's about 72 million shares on offer, but your market cap is pretty teeny tiny. And when I see a small market cap and a 300 mil funding that's needed, I sit back and go, how's that going to happen? Sorry to be blunt, but.
Yeah, exactly. And
hopefully I don't upset you.
Everyone's thinking the same thing. So it's and obviously, we're not trying to build this tomorrow, and we're only at scoping. And so there's 3 to 4 years between now and FID. And so obviously there's lots of de-risking activities to occur. And so there's lots of company growth that will occur in that time as well, where you would hope to be able to do between debt and equity. But there's also opportunities for offtakes. And so you can see there's been lots of activity recently with, say, Energy Fuels, with our one of our peer projects around the corner from us with Astron, looking to invest up to 180 million into their project for their rare earth offtake. Also, yesterday they announced the big acquisition of Base Resources, an ASX company. So there's lots of activity, and that really supports the strategy of the monazite as a valuable commodity. And so also for the mineral sand side of things, we're having good, robust discussions, with off-takers at the moment about the potential for our titanium. So that's all sort of part of the process, and as we work through over these next few years, we well understand where we are right now, and so I think the next few years there's a path to get there. But we're open to all options as well. There's partnering and off-takers.
But this scoping study, correct me if I'm wrong, this was purely for the Goschen Central project. And I think you've got 8 or 9 other projects, don't you?
Well, yeah, there's lots of other tenements. So yeah, about 6, 7 other tenements
Yeah.
that we're conducting exploration on at the moment.
Okay.
So when we were back out drilling in January this year, we conducted another 7,500 meters. Firstly, it was to go along back to Goshen, do some extension drilling, which we then can go along and will give us enough information to be able to go to that next stage gate, and also give us hopefully try and push out that high grade zone. But also we went did more at Watchman North and at Douglas. And so that was exploration, discovery level drilling on roadsides. And we saw some really great results. The exploration team have been, hot on it. And we released the announcement about 2 weeks ago, their visual results. And it looks really promising. I guess you're bound by what you can say in the announcements. But we had some photos of pans in there and tried to give as much information as we could. Those assays are coming back through to us now, and so we releasing them as soon as we can. But they look like really promising results. And it's the Douglas project, for example, was only about 20 kilometers from the ex-Aluka Douglas mine that only finished mining in 2015.
Okay, interesting.
So if you draw the connection, there's various strands that have been identified, and then we think we've discovered a new strand. And this is the strand style, so it's different to the Goschen project. Coarser particles, probably a bit more of a traditional flow sheet design, smaller capex, and probably a bit more for, I guess, a tried and tested project. And so we're really keen to be able to get back out there as well and to get some more drilling and to go through the process of working towards a resource for that.
When you listed, you raised 8 mil. I think you've still got about 4 mil. So there's been you've been cautious with the spend. Would you look at potentially, I mean, how far do you go with a project like Douglas? How much money do you spend on Douglas? Because to me, I'm looking at going, well, the scoping reports come out for Goschen Central. That seems to me like the lead project, if you like. How much of the budget do you spend on some of these other tenements that you have, and how do you balance it?
Yeah, well, I think when we went through the IPO, obviously you have to break out how you're going to spend at each of these projects. And I guess for Douglas, there was 2 tenements as part of the prospectus. I think we've broken it out reasonably equivalent, about $1 million each for development of the project. Sorry, Goshen, we've sort of got that to a nice milestone point now, and we can just sort of continue to de-risk that one. But whilst we then shift and put our focus onto some of these exploration projects and really see if there's something there worth chasing. We don't really want to just keep on drilling holes for the sake of drilling holes. We want to make sure we're chasing something that's really worthwhile. I guess the advantage of the mineral sands is you don't need to, we can do a lot of roadside drilling and be able to understand, is there a resource there reasonably quickly? And air core drilling, our recent campaign, we're conducting drilling for about $60 a meter. So we can, for a swing, you're spending under 200,000 and you're covering, 80 odd holes. And so you're able to get a really good look at that tenement and really be able to understand, should I go back and do another couple of swings, or do we, park that one up? And so Douglas, what we saw, we're really keen to go back and go there again. Obviously we've got to work in with the farmers. It's a farming area.
Okay.
So crops are going in, well, we're in April. Yeah. So crops are probably going in now. And so that's why it's always between December and March is really the hot, the time to get out on there. Crops are off and that, but at the moment we're hoping we can get in, do some more roadside and be able to get a really good look around there.
What's your relationship with all the farmers and the landholders around there? Is that pretty good? Because sometimes it can be a little bit tricky.
Exactly. Well, I think for the Goshen one, it has been, it's been really smooth sailing. I guess we're pretty new, not known as well, but we have been doing on paddock drilling, and there's been farmers there that have been really supportive. And so we've been back there numerous times, and it's all in everyone's best interest to get along and to, if we can get in and out as fast as possible and have the less impact for the farmer as much as possible. We try and conduct best practices as possible as well to make sure everyone's left with a good, taste afterwards. And so obviously there's a bit of noise at the moment with the various other guys that are at FID going through their
Yeah.
public viewings at the moment. And so obviously, yeah, there's been lots of stories in the ABC recently about the mineral sands sector at the moment in the Western Victoria. So it's
Yeah.
getting a lot of noise, but I guess at this stage, yeah, I guess all we can do is just sort of stick to what we're doing and make sure that we're doing best practice.
Yeah, and I think it is important. I always say often that, farming and mining can get along so long as there's good communication.
Yeah, exactly. And yeah, we've had really strong supporters. We store our samples in their sheds
Oh, really?
whilst we're doing drilling. And we're sponsoring, putting some money back into the local communities through sporting groups and that. So we're not just we don't just want to be a flash in the pan, or we're there to sort of build long lasting relationships and and a lot of these farmers sort of have farms at that project and then that project as well. So you've got to be working with the whole community as well, because everyone talks at the pub at night as well. So
oh yeah. Oh yeah.
So you got to work with everyone and make sure there's a good taste list for everyone.
So there you go, ABC. The farmers and the miners, they do talk to each other. They do business together, and it's not all doom and gloom. And I think that's an important point to make. All right, let's talk before we run out of time about. I'm speaking to you in April of 24. What do you think the catalysts are for shareholders or potential investors going forward? What's the next steps for ACDC as we head down into 2024?
Yeah, so for the next steps for the Goschen project right now, so we completed the drilling in January. Assays we've released, that's now going through the resource geologists, and we'll be looking to do a JORC update mid-year. So we're hoping to really be able to bolster grade. We don't really need more tons. We've got over 600 million tons there. Really want to try and push grade. Grade is king, and that then directly relates to better economics. And you can see that in the press release, the sensitivity of the HM grade. If you can increase that, it has a big turnaround. We also have the pilot plant work being completed right now. So we set metallurgical sample to Mineral Technologies. Started this year, they processed 1.5 tons worth of material. So that's testing the flow sheet, and that's also producing the individual products. So then we can go along and do product quality testing and then talk to the takers. So we can say our zircon is this, our titania is this, and then our monazite we can then take through to ANSTO and go along and do that next stage of development, which is really key to de-risking the project there. On the exploration front, which is probably the sort of short term, and hopefully we can get a lot of press release and story coming out of that in the next few months. So it's really with the Douglas project following up on that drilling that we released a couple of weeks ago. We're really keen to try and get back out there if we can in the next month or so, and to try and chase up what we have confirmed that there's a strand there, and to be able to then go along and see the strike length of this, and then be able to start working with what's the sort of size of this deposit. And we've also, with all that drilling that we've just done, we haven't released all the Douglas or the Watchman results yet. So they're still coming through the lab right now, and we're still processing through all that. And so the next 2-3 months there'll be lots of assay results and drilling underway.
When you talk about the pilot plant and getting the products done, where are your off takers? Where are they coming from?
So I guess the ones we've been talking to are the Japanese based. So they're manufacturers. They're already doing it, so they're looking for further supply, further feedstock. So they know exactly what they're after, and they're looking at a plethora of projects. And so so I'm just trying to make sure that we can understand as much as we can right now about our resource and be able to show them our specifications.
Right.
And if it fits the mold and we're working together, they will look at either offtake and also project investment as well. So
that's the question I was going to ask. Because it goes back to that funding question, doesn't it?
Yeah.
With Energy Metals coming in and spending 180 on 180 million with Astron, is that the sort of thing that, because that helps with less dilution at the end for shareholders, doesn't it?
Exactly. Yeah. So if we don't have to go back to the well and go by equity, if we can get project investment through some of these larger off-takers, and then also as they assist through the stage gates, and they can bring their knowledge as well as we go through their stage gates to make sure that it's going to be meeting their requirements, then that works. So that's wins for everyone.
All right. Well, we're running out of time. You're going to have to come back and have another chat to us before too long, because there's lots of news happening. Let's wrap it up. Give me 3 reasons you think that people should be sitting up, because I said it back in November. You're at cash backing or less at the moment, so there's no value in any of the projects that you're looking at the moment. Which to me, I scratch my head, but I think that's to do with everyone going to the next shiny thing, which is gold and uranium at the moment. But rare earths ain't going away.
Exactly, and if you buy into the the energy transition, the decarbonisation, we've seen the stabilisation in that rare earth pricing, and forecasts are sort of showing it to be on the way up again, and that's when all these projects will be looking to come online.
Right.
And so ACDC really provides that access to that market, and with our downstream strategy and processing of the monazite, and that's I guess the validation through that is through the Energy Fuels acquisitions and looking at their various projects, the value they see in the monazite.
Yeah.
And I guess as well, we've only been listed for 15 months. As you mentioned before, we raised 8, we've spent 4, we've still got 4 in the kitty. We've achieved a hell of a lot in that last 15 months. Drilling, JORC, 2 scoping studies, more drilling, and I guess thirdly, our exploration team is a well-experienced exploration team. And there's lots of other discovery projects coming through, and we're always looking at other options as well all the time. I think we've really shown our expertise in exploration, discovery, and project development over this short sort of 15-month period.
Well, as I said, the exceptional results from the scoping study, it's actually showing that this is going to be a good project. I'm talking Goschen Central, ladies and gentlemen, not Douglas or Washam North. Those are more on the exploration side, but there's a lot of news coming out. A JORC resource update in mid-year, I think you said.
Yep.
All right, so you have to come back and give us an update on that one. But for now, thanks so much for joining me on Making Money Matter. Ladies and gentlemen, if you want to find out more about ACDC Metals, just go to acdcmetals.com.au. There you'll find all the announcements, all the information, and possibly even this interview on there at some point. Tom, great to see you. Thanks for joining me today.
Great. Thanks, Kerry. Thanks for the support.